Couple of sessions in the red, not today, very good bounce.
A great day for the Aussie market. In fact, we've seen the highest level for 2013 today, beating our previous high by less than 1 point. The market up by 1.1%. We saw some strong volumes going through as well. $4.9 billion worth of stock being traded. As you mentioned, James, we're at the highest level that the market's been since 2008. And it does come at a time where we are seeing quite a bit of bullishness in overseas market, with the US stock market reaching an all-time record high overnight. The Dow Jones Industrial Average actually over 15,000 points now. So I guess for the Aussie market, technically we really want to stay above that 4,200 point level over the next couple of sessions, and we really want a clean break because we've just managed to finish just under that 4,200 point mark today. In terms of today though, it was the trade numbers from China which gave us the extra boost. We saw those trade numbers being extremely optimistic. Exports 14.7% growth, and imports we saw stronger than expected growth, 16.8% coming through. So that really gave the Aussie dollar as well as the material space a strong boost. In fact, we've been talking about materials all week, and a very strong uptrend now in place for BHP Billiton and the other material stocks. If we have a look at BHP Billiton, this is actually the market, BHP Billiton. This is what it looks like over the last 1 year, and you can see we are seeing higher lows and higher highs, so an uptrend in place there. Atlas was one of the best in that space, up by a massive 12.6%. So it is those material plays with operating leverage which are doing the best. And of course, with the Reserve Bank of Australia cutting interest rates yesterday, we're also seeing those defensive as well as the high yielders back in focus. And it was interesting to see those companies reaching a 52-week high today. There was a bias towards that defensive area. We saw Tabcorp, BWP Trust, we saw Goodman Group, also Flexi Group, ResMed, all reaching 52-week highs on the market today. So all in all, a great day for the market. We want to be able to keep these returns and manage to close above 5,200 points for the rest of the week.
Julia, just on the resources, the miners in particular, as you made mention, good moves this week. 3 sessions in a row of strong moves. Have we turned the corner? How are we starting to see an extended sort of upward movement for these guys who have so underperformed?
Well, on Monday we looked at BHP share price, and while things haven't been looking too crash hot since around about February, it does look like a turning point technically where we are seeing an uptrend now in place. So I guess the trend is your friend, and at the moment it's on the side of the material space. We also saw Rio Tinto with a few comments out today, and they were saying that China sales are expected to hit new records this year. So expecting to see iron ore sales remain relatively high. Of course, the other side of the equation though is that we will see a lot of supply coming online from BHP, Rio Tinto, as well as Fortescue this year, and that could have a downward pressure on prices. But for the time being, the materials story looking pretty good, and really that extra boost coming through from those Chinese trade numbers for April today.
He's got a bit of a track record, Don Vultee, in talking a big game, talking it up. He certainly did when he was heading up Woodside, not always quite managing to meet the rhetoric in terms of reality. Are you more confident with Seven West that it is on track, that they are going to meet some of the targets and achieve some of this blue sky we're hearing about?
Well, I think it's always been the market's view that these cyclical industries that we are seeing a low in the current financial year, and they're looking through that to the next couple of financial years, so FY14 and FY15. There's been a little bit of nervousness on whether or not that's going to be achieved, given some of the softer numbers that we are seeing in some of the cyclical industries like the building construction space. However, comments like this really do give the market a much needed boost. So once again, going back to, I guess, the view of the market, which is that FY14 and FY15 will be better. So looking through the weakness that we are going to see in the current financial year. And it's not just the media industry which is going through this. We are starting to see some small signs of life in terms of retailing. The first quarter numbers were better than expected, and we've also seen some positive trends returning to stocks like Harvey Norman. So watching those cyclical areas very carefully, and of course we've seen another interest rate cut which hopefully will give a boost to these areas. So watching for that cyclical low, and hopefully better days ahead in FY14.